All right, welcome back, traders. John Caruso here for the afternoon of June 9th. We're going to take a look in on some of these markets here. It is Friday. Happy Friday to everybody out there. We've had a relatively quiet week in terms of economic data. We did have a services number that came out missing expectations on Monday, but it's been relatively quiet since then. We did see the unemployment claims also jump to I believe, 2-year highs, or at least a year and a half, at least 18-month highs on unemployment claims. We saw those come in at 261,000. Markets were looking for 235,000. So starting to see some signs that the labor market might be turning here. It is happening very, very slowly, but let's just jump into it here. Let's take a look at the S&P 500. We've got that up here on the charts, making a lot of noise right now. Excuse me. Making a lot of noise right now in the S&P 500. That close above 42.92 did mark a 20% rally off of the October 22 lows that we saw down at 35.02. And there's a lot of talk here in the media that it is the start of the next bull market. We remain skeptical of that call. However, there's really not a lot of a whole lot of negative things happening on the chart right now. As you can see, this is just a clear uptrend that we've seen in the market, really since the start of the year, and positive momentum. We are starting to see some friction in the S&P 500 off of this 61.8% Fibonacci level. This is a resistance area that we've been noting. Of course, that's the old past peak right here at 43.27. That's from the gamma squeeze back in August of 2022. And we're right there tucked up against that level once again here. So I do expect some price distribution back on the downside. We'll say over the next 3 to 4 weeks in the market. However, that's likely going to be a buying opportunity. I think the deepest I have this correction drawn in here is back to this trend line that we've been that was established between the lows of October and the lows of this past December. I do expect perhaps we get back down perhaps as low as 41.60. That's as deep as I can get this market on any kind of corrective setback before perhaps this market regathers itself and attempts to rally once again out into the end of the summer. Now, because we still largely remain skeptical of the economic cycle, we do think growth is only going to slow precipitously from here. There's some question marks around the Chinese economy right now. And inflation is certainly going to continue to come down, which right now, inflation abating is being looked at as a net positive for the market. But be careful, because inflation could soon, disinflation could soon start to turn in or morph into deflation. But perhaps that's not going to be out until 2024. So still largely over the near term positive. Do think we're going to see some near-term resistance here check up this market. Maybe a correction as deep as 41.60 over the next 3 to 4 weeks before we stop and reverse higher into the end of the summer. So that is a look at the S&P 500. Clearly, I'm going to pull up the VIX real quick. We've got a lot of vol suppression going on right now in the VIX. I actually have a negative divergence. Price is falling while my overbought, oversold oscillator is actually rising right now. I do think that you're going to probably see that change out after next week. Next week is going to be a heavyweight week. Of course, we've got CPI, PPI, the Fed. But then at the end of next week, we do have triple witching, option expiration day, which I think the vol suppression is probably going to last until option expiration. And then I think the lid comes off of volatility, like I mentioned, over the next 2 to 4 weeks. And we think a market correction could live within that time frame. So that's a look at the VIX as well. Let's jump over to the gold market. Largely not a lot happening in gold. Just ultimately, that's the weekly chart. Let's take a look at the daily chart. Negative momentum here. We did see momentum break down on back in mid-May. 517 broke to negative momentum, largely trapped inside this range. 2000 on the high side, we'll call it 1940 on the low side. What I need to become, we still do have our gold positions at a minimum. We've got them sized at our mins right now. what would it take for me to regross those positions higher? I need to, number one, see price acceptance back above 2000. But more importantly, I'd like to see price acceptance back above 2020 to make me think that we're going to legitimately play for the all-time highs again. As you can see, this move over here following the early May Fed meeting was a blow off top, got as high as 2085. Big time rejection up there. Couldn't quite make the all-time high, and price rotated back to the downside. So we've got a compression of the range, which is telling me that we are going to get a breakout over the course of the next few weeks, which could come back on the downside potentially if we fail to gain price acceptance back above 2000. So you really got to watch that. I remain a longer term bull on gold. I am suspicious of price right now. That's why we've pared back all of our positions back to our minimum size holdings. You got to remember, we did go bullish on gold back in December of 2022, and we've largely been in that market since then. So largely, gold still waiting for a breakout out of this, we'll say, 50 to 60 point range that we're in right now in the gold market. Let's flip over and take a look at crude oil. Same thing as gold, largely just trapped in a range. That's the hourly chart. Take a look at the daily. Largely just trapped inside of a tight range. This is the big range right here, about 82, 83, all the way back to about 66 on the downside. And now we've kind of been trapped sideways in this tighter range. Comes in about 75 on the high side to about 67 on the low side. So still waiting for some, some price distribution coming out of this range. We did get the gap higher this Monday following the OPEC meeting and the announcement that the Saudis were going to be cutting some oil off the market going forward. And now largely we've just kind of chopped sideways. So this market's looking for direction. I still say, because this remains bearish trend, this market is still guilty until proven innocent. It's really going to have to take some price acceptance. For me to get bullish on oil, I need price acceptance back above 81 to 82. We start seeing that. Then I'm starting to think that we can break out into a higher trading range out into the second half of the year. We did see that the IEA did just recently up their oil demand forecast for the back half of this year. So that's perhaps something that could be a catalyst that takes the market higher into the back half of the year. We also do know that China is once again interested in stimulating their economy in the back half of the year. So perhaps that is something that could provide a bullish tailwind to this market as well. But largely, we remain bearish trend, negative momentum, and this market largely remains guilty until proven innocent. So that's a look at three markets right there for you: the S&P 500, the gold, and the crude oil market. Hopefully that was helpful for you. We're going to have more of these updates coming out next week following the Fed meeting. Best of luck to everybody out there, and have a terrific weekend. Take care.